This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade action for Monday and get a look at how things fared to start off the week, let's welcome in John Heinberg with Total Farm Marketing joining us today. John, good to catch up with you, sir. How are you?
Doing well. We lucked out, got some nice rain here in central Wisconsin, or east central Wisconsin over the weekend. And I know that's going to be the main focus of the markets is who's got what over the last handful of days.
Yeah, and I think that was a big focus. It felt like the trade was a little choppy on Monday. Couldn't really decide what way it wanted to go. And I wonder if some of that was, maybe a combo of looking ahead to Friday's USDA report coming up, and then also looking back at this past weekend's haves and have-nots with the rainfall, because you mentioned it, a pretty decent area of corn country from basically Sioux Falls, draw a line over towards Chicago, Milwaukee, down into parts of central Illinois, and got some really good, really heavy rains at some spots, John.
Yeah, you go look at that area that picked up the majority of the rain over the weekend. Again, that Minnesota-Iowa border, you go look at crop production maps and where corn is raised. That's become a major production area, and it picked up some very, very necessary and timely rains in this time frame, even with the temperatures where they are. So, talking to some producers probably in that area too, that might be enough to kind of get them through and really kind of help finish this crop out a little bit here. Things were getting a little stressful because of the heat and things of that nature, but that storm definitely brought some rain in. Some areas maybe even a little bit too much. I know in that northern Illinois area, they broke into the double digits. Now, that's not exactly what everybody needs. But again, just talking to producers all along that line into northern Illinois and into Indiana, they picked up some good rainfall totals and things look good. Now, with that being said, obviously what's south and west of there is the issues. What are we going to see in Nebraska, Kansas, southern Iowa, in terms of those crop ratings that come out this afternoon? So the market was extremely choppy today. We tried to do a little heavy lifting early and got corn off its lows, and but then we got the USDA report Friday, and nobody really wants to stick their neck out here per se and make a decision. It's just going to be a very interesting week until we get the new goalpost set here with the numbers from the USDA on Friday. Then we can start assuming if we like it or we don't, or we believe it or we don't, and we'll watch how the market trades.
Well, and obviously we can't predict what's going to happen day to day here ahead of this report, but it feels to me after seeing Monday's action and to your point that we could just be kind of range bound and choppy here in these grain markets, give or take a news item that comes into play ahead of this Friday report, because as you just said, not a lot of people want to stick their neck out here. To me, this feels like a good spot to get some defense in place ahead of this report, just in case we get a surprise from USDA.
Yeah, there's a couple different ways you can handle it here. If you're truly in the bullish camp and think prices are going to go higher, then you got to look at some of the put strategies. You got shorter time, the September puts, either short day puts under new crop, than otherwise September puts. If you still got some corn in the bin, they don't have a lot of time on them. They expire here on the 22nd, but at least they give you a little cushion through the numbers in a day or two after. Otherwise, you got those full length puts out to December. We got also October puts. You got November puts, all tied to the December contract. It's a great spot to make sure you build the floor in. As you kind of said, we've been consolidating. I've been looking at the weekly charts. Realistically, since we fell apart and kind of found some bottom, we've got just a wide range. Since mid-June that we've been trading. Feels like the price could make one more move out of that to the downside. And if that's the case, there's some targets below that are kind of scary. I go look at a 525 target zone, a $6 put, a 580 put, somewhere in here, just making sure we protect that low that we put together here the last few weeks. Might be pretty good investment and still give you the opportunity to keep the market open to the upside at harvest.
Well, now another thing that you and I were talking about, and I think it's another story that bears watching. We got some sales on Monday morning, corn and soybeans. The soybeans were to China. That's a totally different story. But corn to Italy showing up on the board, and then unknown destinations. It sounded like the heat's really taking a toll on that EU crop over there. So I wonder how much that story could play in for corn, for wheat over there, et cetera, as we work through and get into this fall. I got a feeling, just seeing some of the stories out of there, we could see more business come to the U.S. possibly.
Yeah, that might be a number that we really got to watch on the report here this week is what does the USDA and the World Board do with the European crop? How much damage could be done? You know, it's well known that Italy was dealing with a major drought issue, so their supplies are tight. So it did, was kind of reflective in that purchase today, just making sure they had additional corn purchase. And then there was an unknown destination sale in there. We always chalk that up to China historically in the past, but that very well could be anybody else that stepped in and maybe somebody else in the European side stepping in, picking up some corn. So that's a number I'll be looking at too. Now they're not a monster player in terms of the world market, but they are a player in the world market. And when you're dealing with a globally tight supply overall, any bushels lost is just going to add value into the marketplace. So kind of keep an eye on where the USDA and, like I said, the World Board puts that European number, because things definitely have been very difficult there in terms of some of the heat that they were dealing with this past summer.
Well, that daily news we got, I know we got weekly export sales and shipments. Do you see anything there on Monday that stood out to you, good or bad, John?
I like the bean number today on the shipment side. Still not where we need it to be, but a nice jump getting up over the 800,000 mark here with a couple of weeks left to go in the marketing year. It kind of looks like not saying an anomaly, but a nice jump over the pace we've been at. So that might tell us that, hey, some of these beans are moving now. Some of the reason we saw a little bit of firmness in those front months today, and maybe we got a little bit of export demand going right here, as well as the soybean meal side has been very active recently as well. So that was encouraging. Corn number was kind of ho-hum today. Again, like to see a little bit more strength there. Not sure how that's all going to correlate into the numbers we see on Friday. Do we see some demand adjustments adding to those carryout totals? That'll be our biggest concern in this marketplace. At least on the demand side, is if they scale back some of those export totals forecasted here for this year.
Now, on the cash side, corn and beans, John, isn't this typically a window where we see basis weaken a little bit, but yet it's still relatively holding firm? I just wonder your thoughts there with the cash market for both corn and beans and where that kind of stands right now across the countryside.
Yeah, this is that window, and it's getting to be kind of crunch time here, and it's still holding in there pretty well. Again, just showing some of the demand that's out there, and maybe some of the tight supply or the fact that farmers maybe just still holding on to grain. Now we're getting into that time frame where we need to clean out the bins to get ready for the new crop to come in, and we can see that hit that cash market. That's kind of that signal that things really kind of fall apart, is when we start seeing that basis kind of tumble, when all of a sudden that end user says, hey, we got new corn coming, we got enough to get us through, we don't need to bid up anymore, and you see things kind of tumble, and that can happen extremely quickly. So again, for producers, you've got good value out there. If you got a basis level that's friendly and you're still sitting on some old crop corn, I mentioned before, there's two ways of handling things. You buy puts. The other way I didn't finish out was, sell the cash grain, step into the market with a call or call spread, at least define your risk to the upside and get that floor secured. That works both for both old and new crop in this window. You still got good value there. May want to take advantage of it and shift that risk over to the paper side of the equation. If this market were to take off because of a surprise from the USDA or early frost causing some pop in the market as we get closer to harvest, at least you got something there to keep some value open in terms of that grain that you move here.
John, one more thought on soybeans as well. The U.S.-China tensions over Taiwan, circling back to that sale to China this morning of beans. Do you think that's already become an old story here for the time being, and barring we see any other escalation of tensions?
For the most part, it was still kind of out there today, but it did fall to the back burner over the weekend because, it's still going on and nothing was escalating other than just the activity. And they're kind of continue those war games or war practices as best they can here for a little bit longer. They extended that a little bit today. So that makes everybody a little bit nervous. But again, they still come down to the fact that we got some value in this market right now. U.S. beans are still the cheapest beans in the world, probably now through the end of the year. until maybe we see what's going to happen with that South American crop as they start planting here in the next handful of weeks. So obviously the Chinese imports are down so far in the year. We got that July data that basically we're running about 9% under last year at this time frame, even though last year was a strong year. That's a reflective of the high prices and maybe some of the demand tightness that they've got over there and some of the margins that aren't there. So there's a lot of bean sales on the books. It'll be interesting to see when we get to this fall, how fast the shipments kick in and we try to get those beans on a boat and get them out the door.
John, let's talk the wheat market. That seemed to perform the best overall, it felt like, on Monday's trade. I saw a report India might scrap its 40% import duty to try and cool some record high domestic prices. That felt like the big news item in the wheat markets, at least to get things going on Monday. Would you agree, or did you see something else there on Monday?
That was part of it. We had the little bit of weakness on the overnight based off the Russian crop getting bumped up again. And we'll see where they are in terms of their export quotas and things along those lines. Again, dealing with domestic prices that need to get controlled. That Indian news obviously does bring a little bit of support into the market if we do kind of see some purchasing come out of that. Again, there's a lot of demand for wheat in this world globally. Biggest thing for me, though, I'm looking at that chart. We're putting a bit of a round bottom in on this wheat market. Maybe we're finally getting to a low end here where prices are getting undervalued overall. Now if we could just get a little bit of upside movement, you go look at some of the moving averages and things of that nature. Boy, if we could just get about a dime to 15 cents through that top side, that would turn this chart around pretty quickly. Not that we're going to be off to the races, but we can start building some premium in here into this marketplace. I think a lot of it too is going to depend on what do we see for corn numbers and supplies here as well. Because if those cereal grains seem overly tight, then obviously we got wheat undervalued and the corn market may be also undervalued as well.
I'm a little concerned. I guess I shouldn't be too concerned, but with planting coming up for winter wheat in the South, some of those dry areas of Texas, Oklahoma, barring they catch a tropical storm of some kind and we get some moisture replenished down there, I'm hearing some rumblings. Some producers may not put a seed in the ground just because it's so dry, and just with the tight global supplies of wheat. I think that's a story that maybe bears watching in the weeks ahead, John.
I agree with you on that regard. It's going to be something we're going to keep an eye on here. Do we get some actual progress? And, obviously a producer, given the cost of inputs, doesn't want to put things out there that may not even be productive. That might be something to help add just some value into the wheat markets in general, just to incentivize that producer to try to get that wheat in the ground. So I agree with you. That's going to be something that's definitely going to be on the focus. I think when we get the numbers here in the next few days and we'll see where things are, this market's going to start focusing on where we need to be for next year and encourage that production, whether it's a winter wheat crop or planting next spring and things of that nature. But again, it will be interesting to watch because you go look at those drought monitor maps in that region of the world, things have not improved and have actually gotten even worse in this last run, especially with those high temperatures and just a flat out lack of moisture in the air, in the atmosphere.
John, let's move to livestock. Cattle and hogs Monday, fairly solid, fairly strong. I think took advantage of some of the choppiness in the grain trade overall. Starting with cattle, you take a look at those markets. Cash trade last week was okay, but still, it just feels like this cattle market kind of slugging along here, looking for some of that upside momentum. What are your thoughts with cattle after you saw Monday's price action and kind of get into this week here?
This cattle market slowly putting together one heck of a rally. We're sitting at a 45-degree angle on these October cattle, basically, in terms of the price movement. It's not been anything too extravagant. We had a solid day, obviously, last week to give us a triple-digit gain, and now we're consolidating at the top of it. Cash trade did firm a little bit last week, talking to a couple cattle people. Packers are looking for cattle. One thing that's out there, too, is the choice select spread is really wide right now. It's over $25 between the two. That shows me that the lots are fairly current. Packers are going to need to bid up to find quality beef to meet that domestic demand, which hasn't fallen apart. That was one of the thoughts that was a concern in this market, would be with the recession chatter and tighter consumer dollar, that maybe beef would suffer. And we're still seeing that hold together. These charts are looking very good right now, probably also led by that strong feeder cattle market. This all comes back to the fact that the cattle numbers are not there at this time frame, and that's going to carry well into 2023. Cow slaughter continues to run at a strong pace. And then on top of that, replacement heifers are going into the lot instead of into the herd. So we're not bringing any new animals into that sector. And that's just going to keep this thing very, very tight. Again, I still like the long-range cattle market. I've been that way for quite a while, and I'm going to stay that way at least until proven otherwise. It feels like we got some more highs here in front of us, given the way the charts are acting, and it's just going to be a nice steady climb as the money has been moving into this cattle market. I know last week I talked about open interest a little bit with a couple of my interviews, and that number is growing. That just tells us there's new money moving in, and there's some room for this market to grow, and historically a window where we do see open interest continue to move higher.
How about hogs, John? Final week for the August contract. It's still relatively in line with the cash index, but on Monday I saw the October contract break over $100. So that makes me wonder, is this October contract going to start creeping up near that cash index to try and get up to the August level as that contract is getting ready to go off the board? I have to wonder about that.
That's something I've been watching too, has been that spread between August and October. It was up to $25, $26 last week, down to 21.5 here today after trading. We did see that October contract did not take out the contract high, but contract high close today at the 130-cent level. So good day there. Again, that's the big question. We're in a window where we could put a bit of a fall high in as we expect weights to kind of grow and numbers to start picking up. But those numbers are still going to run under last year's levels in terms of total hogs available. We'll see where these quarterly hogs and pigs report numbers come into play here. Are those numbers accurate? Are those pigs out there? And again, like in the beef side of it, the domestic demand has stayed pretty good. You still got retail values trading near the highs for the year, and that's keeping that cash market supported. So right now, that October contract looks like it wants to take out that contract high. We'll see where it wants to get to. But definitely as a producer, you got to be starting to look at those front months. This may be a great opportunity to make sure you get some puts underneath this market, because now we're getting to that overbought stage, especially with this explosion after Thursday morning's open, which was so ugly last week. We've rallied nearly $7 now on that October contract. That's starting to show us maybe we're stretching this out a little quick, and you'll see how that snaps back. So, flexibility will be a key. Pick up some defense underneath this. If you got those hogs, keep that top side open and, hope that goes worthless and watch this cash market run if it still wants to.
John, how about the dairy market? Any thoughts there as we start the second week of August?
Again, a scary market to me right now has been that dairy market. And we kind of fell apart towards the end of the week last week, well through that $20 handle. Seems to be trying to pull some energy back towards it today. We'll see. Cheese trade was positive on Friday, mixed today, but that's still going to be the key, is what happens with that demand on the cheese front. Again, I still think we got some more room to go down. Charts are pointing to a fairly good break possibly yet in that milk market. That's still going to come down to the demand that we see. Now, we are heading back to school season. That typically can maybe build up some demand as the schools start purchasing and bringing supplies in here, in the cheese, the butter, and the milk side of it. So we'll hopefully see if we can get some footing. But again, like some of these commodity markets, that chart right now, it still looks like it's on a bit of a slippery slope. And I don't have any indications that this thing really wants to turn around, especially with the way the products have been moving.
All right, John, floor is yours as we get ready to wrap it up for the day. Any final thoughts you have for us here on Market Talk?
Biggest thing with USDA reports this week, and this report will be a mover, and then we'll sit back and wait for the crop tours and everything to start coming out the next couple of weeks. And get, again, those remember measure potential, and potential is still going to look pretty good. So we got to get this thing to finish out. Don't fall asleep on the defense here. Don't try to guess the report and trade the report. Look at your targets, set some protection underneath this thing, and then hope it's wrong. If it's wrong, that means you're going to make it up on the bushels. That's the key here in my mind. And if you're right on the defense, at least you got something there, because again, these markets are volatile. The funds are still fairly long the corn market here. And if they decide to go ahead and run into a negative contract position, now there's some room for this market to fall. And I would rather watch the cost of doing something. Obviously it doesn't get outweighed or is a lot less than the cost of doing nothing if this market were to fall apart.
Well, John, if producers need advice, I know they can reach out to you and the folks there at Total Farm Marketing very easily. How could they do that?
Sure, I'd love to chat with them anytime. Give me a call at 800-334-9779. Shoot me an email, jonh@totalfarmmarketing.com. And don't forget about our website, totalfarmmarketing.com. I know we're putting together a webinar for the report here on Friday for producers. Feel free to go online, sign up, look at the information that we provide.
John Heinberg with Total Farm Marketing. Always a pleasure, sir. Have a great week, and we'll talk to you next week.
Sounds good. Have a good week.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great afternoon.